ICAI sum number 3, July 2021 of 10 marks. An existing company has a machine which has been in operation for 2 years. Its estimated remaining useful life is 4 years. So total useful life should be 6 years. No residual value in the end. Its current market value is rupees 3 lakhs. So if you sell it today, that is after 2 years, you will be getting 3 lakhs rupees. The management is considering a proposal to purchase an improved model of the machine, gives increased output. The details are as under. Existing machine detail is given, new machines detail is given. What details are given? Purchase price, estimated life, residual value. For both it is 0. That is good. Annual operating days, operating hours per day, selling price per unit, material cost per unit, output per hour in units, labor cost per hour, fixed overhead per annum, working capital, income tax rate. Assuming that the cost of capital is 10% and the company uses WDV of depreciation at 20% and it has several machines in 20% blocks. So your knowledge of income tax will be also helpful to you. Advise the management on replacement of the machine as per NPV method. The discounting factor table is given. Please understand, this question is not whether you should purchase new machine or not. What decision you are taking, please try to concentrate. Whether to sell old and purchase new. This type of decisions are replacement decisions. So please understand, if my old cash flow was 5 lakhs, if I purchase a new machine, my cash flow will be 6 lakhs. My relevant cash flow will be only 1 lakh. For decision making purpose, I will be considering only rupees 1 lakh. Sir, why we are purchasing new machine? We should consider 6 lakhs rupees cash flow. Why you should not consider? Try to concentrate. Suppose this cash flow was 3 lakhs. 3 lakh rupees is a good cash flow. You might be getting a good NPV. You will purchase the machine. But is it good? The answer is no. Why? Existing you are getting 5 lakhs. If new you are getting 3 lakhs, you should not purchase the machine. So what is your relevant cash flow in this case is minus 2 lakhs. But if you take this, you will be getting correct answer. So what I'll be telling you, what if I sell old machine and purchase new machine? What are my relevant cash flows to find out NPV? If NPV is positive, I will be purchasing new machine and selling old machine. This is the replacement decision. The decision is not only about purchasing new machine. It is purchasing new and selling old, and so this type of decisions are replacement decisions. All right, let us start doing it. Operating hours per day, selling price per unit. Before that, let us take output per unit. What is output per unit? Existing machine 20. That is a 20 unit per hour. How many hours per day you are working? 6. How many days per annum you are working? 300. What will be your output? For machine existing will be 300 into 6 into 20. Which is 36,000 units. What will be output of new machine? Same way, 40 units, 6 hours, 300. 40 units, 6 hours, 300. 72,000 units. This will be sold at a selling price of 10. This will be also sold at 10 rupees. 3,60,000 rupees. Here will be 7,20,000 rupees. Will be nothing but my sales. What will be additional sales? Please try to understand. I am not talking about old or new. I am talking about additional. What will be my additional sales? Is difference between this two, which is 3,60,000 rupees. I have found out difference between 7,20,000 and 3,60,000. Will be 3,60,000 rupees. All right. Which other costs are there? Annual operating days, operating hour. Material cost per unit is 2 rupees. 2 rupees. So what will be material cost in old case? 36,000 into 2, 72,000 rupees. In case of new, 72,000 into 2, 1,44,000. What will be difference? 72,000 rupees minus material cost. No. What will be my additional material cost? That is only relevant for me, which will be 72,000. Output per labor cost per hour 20 and 30. Labor cost per hour 20 and 30. How many hours will be in existing machine? 300 into 6, 300 days and 6 hours. That is 1800 hours, and in a new machine also 1800 hours. This will be 36,000 rupees. This is 54,000 rupees. What will be difference? 36, 54 will be 18,000 rupees. What is additional labor cost? 18,000 rupees. Fixed overhead per annum excluding depreciation, this is 1 lakh rupees, 60,000 rupees. Existing 1 lakh, new 60,000. What will be additional cost? Please understand, there will not be cost, but there will be a benefit of 40,000 rupees. Not a negative figure, but positive figure. I'll be taking positive 40,000 rupees. Next is working capital. I'll be considering last. Income tax also I'll be considering afterwards. Income tax is important because I will be doing depreciation, and depreciation is excellent point in this particular question. Advise the management of replacement. So I have taken practically all incomes and expenditures which are operating, and let me find out what will be my additional profit per annum because I am replacing old machine by new. This is additional figure, and this all figures I have taken additional. And let me find out the answer. 3,60,000 minus 72,000 minus 18,000 and plus 40,000, which is 3,10,000 rupees. What is this? additional profit because I am purchasing new machine. No, because I am replacing the machine. And this is of course operating, except working capital and taxes. I have yet not considered working capital, depreciation and taxes. So it is earning before depreciation and taxes, which is 3,10,000 rupees. Let me put in 3,10,000 rupees in my Excel sheet. What I am doing, I have put in 3,10,000 rupees. Now I'll be calculating depreciation, taxes, profit after tax. I'll be adding depreciation. I'll be getting answer of cash flows, and then I'll be finding out present value. Please try to understand. Yet I am to consider working capital. So I will be taking care of working capital separately. But this is finding out operating cash flow. Also, I'll be doing present value in my Excel sheet itself. Challenging task will be depreciation. Try to understand. We need to find out a depreciation, but we follow block of asset method. What is block of asset method? We have learned in under section 32 in Income Tax Act 1961, whereby we write down opening WDV. We add all purchases, deduct all sales, and then we'll be getting base for depreciation. This is block of asset. We need to find out depreciation. But please understand, right now we are not interested in finding out old machines depreciation. We are not interested in finding out new machines depreciation. We are interested in finding out additional depreciation. So how to find out additional depreciation? First, try to understand what was cost price of this machine, existing machine, is 6 lakhs rupees. 2 years have already passed. Minus depreciation for first year will be 1,20,000. This will be 4,80,000 minus second year depreciation 20%, 96,000. This will be 4,80,000. It is 384. Opening WDV will be 3,84,000. 2 years have passed. As far as this machine is concerned, my WDV is 3,84,000. See how I will be finding out what is my additional depreciation. If I don't replace existing machine, then what will be my answer? If I purchase new machine and sell old machine, then what will be my answer? I will be getting the difference, which is nothing but additional depreciation. So what if I continue my new machine? Purchase will be existing machine. Purchase will be 0, sales will be 0. And so my base for depreciation will be 3,84,000. But if I purchase new machine, my opening WDV is going to remain 3,84,000. But I will purchase machinery worth rupees 10 lakhs. And I will sell machinery of rupees 3 lakhs. It is worth rupees 6 lakhs when it was purchased, but now it will be sold at 3 lakhs rupees. We will be deducting 3 lakhs rupees. This is how block of asset works. So this will be 10 lakh 84,000. Please understand, if I don't purchase new machine, I will be having this base for depreciation. If I purchase new machine, I'll be having this base for depreciation. So additional depreciation, I can directly find out base, which is the 7 lakhs. And so the depreciation found out from this base will be my additional depreciation. It will not be my new or old depreciation. It will be my additional depreciation. And what will be depreciation? Depreciation for first year will be 1,40,000. This will be 5,60,000. Depreciation for second year, 5,60,000 into 20%, which is 1,12,000. Minus 5,60,000, 4,48,000 multiplied by 20% is 89,600. Depreciation for third year, subtracting it, will be getting 3,58,400. Depreciation for fourth year, which is a 71,680. What is my WDV at the end of fourth year? Not relevant for this question. Sir, why? We should not find out capital gain or capital loss. The answer is no. When you are working under block of asset method, there is a capital gain or capital loss only in two situations. Number one, when the block is empty. Here there are some machines. Number two, when the block becomes negative. These two situations we are ignoring. Block is not becoming empty. We are assuming block will not become negative. And so depreciation or WDV is not important for this particular question. But of course, depreciation is important. I will fill up depreciation column, 1,40,000. 1,12,000, 89,600, 71,680. I have put in depreciation. So profit before tax minus depreciation, I will be getting profit before tax. And what is my tax rate? Is 30%. Tax rate given as assuming 10% return on, yes, tax rate is over here. It is 30% in both the cases. So tax rate is 30%. As I am having Excel sheet, I will be automatically calculating tax. Please understand, this is not the tax which company is going to pay. This is additional tax, because this all cash flows and expenditure and depreciations are additional. So the tax is also additional. Profit before tax minus tax, I will be getting profit after tax. Profit after tax plus depreciation. How I have found out this? Profit after tax plus depreciation will be nothing but cash flows. So I have got operating cash flow, which is considering taxation, which is considering tax benefit on depreciation, but which is not considering working capital outflow. Working capital, as I told you, I will be taking it separately. Let me here itself find out present value, because it is easy in Excel sheet. For you, you will have to manually do it. But if my rate is, cost of capital is 10%. Cost of capital is 10%. Then my present value will be 7,88,694. Present value of cash inflow from operating will be rupees 7,88,694. This is present value of cash inflow. Let us consider now working capital. Working capital is cash outflow at the end of 0 year. It will be cash inflow at the end of 4th year. Which working capital we should consider? Please concentrate. Old machine we have already invested before 2 years 1 lakh rupees. Now we require working capital of 2 lakhs rupees. What does this mean? We will require additional 1 lakh working capital as on today, which I will be getting back after 4 years from now. Sir, we will not be getting this 1 lakh back. That is considered because we are considering only additional working capital, that is 1 lakh rupees. Today we are not going to invest this 1 lakh, so we need to invest only additional 1 lakh, and so at the end of 4th year I'll be getting 1 lakh rupees back. So 1 lakh will be cash outflow at the end of 0 year. 1 lakh will be cash inflow at the end of 4th year. So for this 4th year I need to find out a present value. This is a present value. Minus 1 lakh rupees is also a present value. This I need to multiply it with 4th year factor. 1 divided by 1.10 is equal to 1, 2, 3, 4 multiplied by 1 lakh. 68,301. 68,301 will be cash inflow. This will be working capital recovered. I have taken into consideration all the points, including working capital, tax benefit on depreciation, all cost, all selling price. Everything is taken into consideration. Let me find out present value of cash outflow. Please understand properly. We are taking decision today. What decision we are taking? Should we purchase new machinery? No. Should we sell old and purchase new? This is the decision we are taking. We are taking replacement decision. What are replacement? If I replace this machinery today, 0 year, the old machinery was purchased before 2 years and this machine will be having useful life of 4 years. But today, number 1, you will sell old and you will purchase new. You can purchase new machinery at 10 lakhs rupees and you will be selling old machinery at 3 lakhs rupees. So what will be additional cash outflow is only 7. You will not require 10 lakhs rupees today. You will require only 7 lakhs rupees. It is itself a present value. So 7 lakh rupees negative will be nothing but present value of cash outflow. Present value of cash inflow minus present value of cash outflow. I will be getting answer of NPV. 7,88,694 minus 1 lakh plus 68,301 minus 7 lakh. 56,995 is my NPV. Let me write down the decision. As project NPV is positive, try to understand. I am writing incorrect answer. After doing all things correctly, I am doing something incorrect. As project NPV is positive, we should purchase new machine. This is not a correct answer. What is correct answer? As project NPV is positive, we should replace old machine by new. This decision is not of purchasing a new machine. This decision is of replacing old by new machine. And so you should answer in this manner itself. Excellent question. Why? Working capital is a good point. Depreciation is a good point. Whole of the concept of replacement is excellent point. Depreciation, excellent point. It is covering some idea of your income tax. Also, you just need not find out the base for depreciation by block of asset. You need to find out the base for finding out additional depreciation. Excellent question. Sum number 3, July 2021 of 10 marks.